When you're retired, the last thing you want to deal with is a big chunk of your investment income being eaten up by taxes. But here's the good news. You don't have to settle for that. There are ways to reduce taxes on your investment income, and I'm going to walk you through them. By the end of this video, you'll know exactly what steps to take to keep more of your hard-earned money in your pocket. If you're serious about protecting your wealth in the next 2 weeks, click the first link in the description below to get a free gold IRA guide. Thousands of Americans are opening gold IRAs to protect their savings from inflation, market volatility, and tax burdens. Don't miss out. Let's dive into strategies for reducing taxes on your investment income. The first step is understanding how taxes on investment income work in retirement. Depending on your income, you could face ordinary income tax rates on things like dividends or interest, and long-term capital gains tax rates on investments held longer than a year. The big takeaway here is that if you're earning a lot from dividends or interest, it might be time to adjust your strategy. One quick win for reducing taxes is considering tax-efficient investment accounts. A Roth IRA, for example, allows your investments to grow tax-free, meaning you won't pay taxes when you withdraw in retirement. That can be a huge win, especially if you have investments generating a lot of income. Another strategy here is to consider tax-deferred options like a traditional IRA. While you still have to pay taxes when you withdraw, these accounts allow you to grow your investments without the immediate tax burden. Next, let's talk about tax loss harvesting. This strategy is ideal for those with taxable brokerage accounts. It involves selling investments at a loss to offset the capital gains from other investments. Essentially, you're using the losses to cancel out some of the taxable gains. While it won't eliminate taxes entirely, it can help reduce the amount you owe. This is an especially valuable tactic in years where your portfolio has taken a hit, and it's something you should be mindful of each year to minimize your tax bill. But here's where it gets really interesting. If you're serious about reducing taxes on your investment income, gold IRAs can be a game changer. Unlike traditional investment options, gold IRAs allow you to protect your wealth from both inflation and taxation. With a gold IRA, you can hedge against market volatility and preserve the value of your savings. This means your retirement wealth could grow without the risk of losing value to taxes or economic instability. A gold IRA offers tax-deferred growth, so you're not paying taxes on your earnings year after year. Plus, when you're ready to start taking distributions, you have more control over how and when you access those funds, potentially reducing your overall tax liability. If you have $100,000 or more in your IRA or 401k, or even 5M plus in savings, it's definitely worth exploring this option. Now, another strategy is considering municipal bonds. These are bonds issued by local governments, and their interest is often exempt from federal taxes. While they're a relatively low-risk option, they can provide a steady stream of income with lower tax implications. However, they're not as effective for everyone, especially if you have significant income, where tax-free bonds might not be enough to offset your tax burden. Lastly, don't overlook the power of careful withdrawal planning. If you're drawing down on your retirement accounts, consider taking withdrawals from tax-deferred accounts first to let your tax-free accounts like Roth IRAs continue to grow. This can help you manage your taxable income more efficiently and keep your tax bracket lower over time. The key takeaway here is that reducing taxes on your investment income in retirement doesn't happen by accident. It requires planning and a combination of strategies tailored to your specific situation. Whether you're using tax-efficient investment accounts, tax loss harvesting, or considering a gold IRA, the goal is to keep your hard-earned money working for you without the heavy tax burden. If you want to learn more about protecting your wealth, click the first link in the description to get your free gold IRA guide. If you're someone with 100K plus or more in your IRA or 401k, or you have 5M plus in savings, a gold IRA is a perfect fit to help safeguard your future. Thanks for watching, and remember, the best time to start planning for a tax-efficient retirement is now.